Good evening, traders. It is Tuesday, September 28th, 2010. Gonna go over some charts, talk about the markets a little bit. We've been in a quantitative easing environment. The Fed has been saying this for quite a while, and the markets rallied up to the right shoulder area, which is SPY 115. And the last 3 days we've gone up there and we haven't been able to climb above that level. And at the same time, we tried to pull back today, and the market rallied after some bad consumer confidence numbers. So I happen to think that we're going to start to decline soon. I'm not sure if we break 115, it could go a little higher, maybe 118, maybe even 125 possibly. But if this 115 area holds, you could be in for a potential major top here. It's been a very difficult trading environment just because the market has not really pulled back at all for the last 3 weeks, and it's been on very low volume, and there's been a lot of setups where you would think to go short, and it just doesn't work out. At least there's no real follow through to the downside. Today was another one of those examples after the down day yesterday, and then the early selling and the 10 o'clock bad news. We still rallied, which was we had these unexplainable rallies that seemed to be happening. So the market doesn't seem to have the selling, the volume on the downside, and it seems like it's not gonna. None of these moves are gonna hold until there is volume that comes in. As you see here, this is a UUP, which is a dollar index fund, and it's been going down. Since QE was announced, you had the big around here, around the 20th, and it looks like there's a falling wedge that's setting up there, which bullish falling wedge. And you got some positive divergences here on the MACD. If you look at my pointer here, you got some higher lows here, and looks like you're building some potential positive divergences in the real near term right here. You're very oversold. I do think we're going to be bouncing in this market, and you have the some positive divergences setting up here on the RSI. You just haven't been able to take out, you haven't really been able to get a strong rally. There's excessive bearishness against the dollar, which is understandable, but there was one of the Fed members today came out after the bell and said that there's no unanimous decision on quantitative easing, and Bill Gross was very bearish on quantitative easing. He holds the same opinion apparently that I do, which is quantitative easing isn't really going to help anything. Just basically going to give the banks a lot of good prints on investments that they're holding, and it's going to put more pressure on the dollar, which is going to give us less purchasing power, which is going to really squeeze the little guy even more, and it's going to, and in effect, that's going to hurt our economy. So it's actually, I think it's a negative for the economy, not a positive. And the banks, the recipients of the quantitative easing, have been trading down. So that the theory that even it's that great for them, I mean, their losses due to the real estate bubble. Bank of America holds 2.3 trillion in assets. The gains that they get from the quantitative easing are not going to be able to fix, massive write-downs. I mean, if they might have to write down, say, 25% of their asset value. If they had to do that, the Bank of America is bankrupt. A lot of these banks really are bankrupt, but because of the accounting rule change where you don't have to mark to market, they're able to continue the fraud and continue Bernanke's games, where he's printing money, and the media is making it out like it's a good thing, when in reality it's a really bad thing, and it's going to lower our purchasing power. It's going to put more debt on our hands. People do not need this. I mean, everybody's in a lot of debt. It's going to take a long time to get out of this mess. But the solutions that are, the Federal Reserve is not government, but they act like government. The things that they're doing are just blatantly bad and corrupt and evil, you could even say. And it's not going to help anything. It's not going to help the real economy, and that's really what people want to see. But we get, they dance around this issue, and they give you, bogus reasons, and for what they're doing, and and then they act surprised when it doesn't work. But in reality, they know exactly what they're doing. As you look here at the SPX 1 year chart, you can see we came up to the 1150 area today was the high, and we touched that and backed off a bit. Volume's been on the light side. You have the histogram ticking down here for several days now. You got the stochastic is 93 and 84. You went below the 80 level one day, and then you pulled right back up, back above. I'm looking for these markets to pull back. As you see here, you had the big white candle, which never took out last week's high, and then you had 2 more days this week where we've touched this high and we failed to break out. So I would look for some sort of retracement, especially because we have a lot of gains. If you look at the monthly chart of the SPY, I mean, you have a 9.47% move in the S&P, and look at the volume here. The volume is very weak. If you compare it, we had the sell-off in May was very high volume, and in June was also sell-off a little less. July bounced, volume was a little lighter. August you had another sell-off, volume was a little lighter, and now September you're having a huge bounce, and it's on very anemic volume. So do not trust this, especially we're hitting this key resistance area here. I would be very careful being long now. This market is going to come in, and it's just a matter of when. Right now it looks like it could be a good time. As you see here, I'm looking at the weekly. We're very overbought. We do have an MACD bullish cross that is above zero, but you have like some very possible negative divergences setting up here, and you're very overbought. You're also at the Bollinger Band. This could be a very good opportunity for a pullback. If you look at the VIX market, the VIX daily, we did have an up candle today, closed above the 18-day moving average, up 6 cents. You have the stochastic actually coming down, even though it's only it went up halfway. Now it's coming down at 43 and 52 reading, but you have a bullish cross on the MACD. Histogram is flattening right now, but it is above zero, so the black line is trying to climb up to the zero area. The Bollinger Band is contracting big, so I'm expecting a big move here, and I would expect the big move to be to the upside. You've been building a nice base here. You have good positive divergences here, and the market's very overbought, and we've touched that area 2 times and failed. We're going to look here at the SPY 60-minute chart here. As you see, all these MACD lower peaks as you're making higher highs in the market. You have a lot of negative divergences setting up here. As you see here, at the end of the day, you had the rally at the end of the day, then you had a ferocious sell-off when you hit the 115 area in the last 5 minutes, and you wound up closing at 114.67. But it looked like when 3 o'clock closed out, it looked like the 2 to 3 o'clock candle was very bearish, and then just there was no follow through again, and then they just started taking this market right back up again, and then they took it from 114.20 to 115.04 as a high, and then it wound up closing at 114.67. But Bollinger Bands are very tight on here. There's probably going to be some big move coming in the early part of the morning tomorrow. We should get some movement. You can have the last 2 trading days of the month. Should be interesting. All right, I'm going to try to do my best to put some more videos up here. Like I said, I haven't been around the house as much. I've been kind of like a nomad, but I appreciate the input from you guys, and I'm going to try to get some more videos up here. Have good trading.